Central banks are notorious for acting within the shadows, creating the policy of a nation without the consent or oversight of anyone who is actually accountable. Their plans are only made public after they are put into effect. But of course, as Alan Greenspan once said, there is no agency which can overrule our decisions. That's a blunt statement. You came here for the truth. Today, we are going to look at how the central banks use this to collapse the markets. I'm going to start off with two recommendations that you need to look into. Number one, The Creature from Jekyll Island, one of the greatest books that I have ever read. Many of you have read this book. If you haven't, then you need to commit to it. It's a large book, but there is so much detail in it, and yet it is easy to understand. G. Edward Griffin is an amazing author, very simple, yet the subject is quite complicated. So I read this book prior to writing my own book, and that is The Money GPS. I'm going to be heavily biased, and if you haven't read this already, then I definitely recommend it. This was my first book, and I took some pointers from The Creature from Jekyll Island, as well as many, many other books, and simplified it, dumbed it down to such a level that individuals with no experience whatsoever can understand what's going on. Now you get into the history, you get into all the details, and I think that it is a great introduction to The Creature from Jekyll Island in some ways. So that's number two, and number three is this. This is directly from the Fed's website. You need to know about liquidity. Liquidity is the most important factor for how crashes, collapses, calamities, corrections, how they are all made. The central banks hold the power in their hands to create a boom or a bust at any moment. I assure you, I am not exaggerating. I am not basically talking out of my you-know-what. This is a fact. They literally hold the power in their hands, and liquidity is the key. You can look at this, or you can just type in central bank liquidity into a search engine and understand what it is. I assure you, this is what you need to know. It's not about particular banks. It's not about stock trading or bonds or buying and selling and everything else. You need to understand how liquidity works, particularly when I talk about that with the central banks, because of course liquidity is sort of a generalized term, but I'm talking about how the central banks use liquidity. This website has a pretty good breakdown of what that all means, and then understand that to a deeper level of how they use it to basically decide at any moment when the crash should happen. They can dry up all of that liquidity and watch it all come down. This is genius on their part because they own and control the system. If you think that the Federal Reserve or the ECB or the Bank of Japan, they all act alone, you don't know how it works. They are all in it together. That's a fact. Okay, so that's the three important things that I want to discuss. Now let me get into the topics for today here. Relevant market size estimates and the share owned by central banks. This is as of mid-August 2017, so we're looking at new information here. Government debt. Now we know the central banks around the world own a lot of government debt. It is incredible to see that Japan basically owns half of the debt. I'd like to know who owns the rest of it, because I quite frankly do not believe that the central bank is, really 90% of the buyers out there. They probably own it through subsidiaries, or they have corporations that are out there buying up the debt. I mean, that's just the way that I believe from other statistics I have read. Looking at the Fed, looking at 23% of the market. And of course, you have in the UK and in the Eurozone as well. Central banks own a very large percent of the debt. It doesn't matter if this is the right number or the wrong number. We know that they're purchasing every single month, and that is going on a global scale. You are seeing what central banks have the power to do. They are bigger than any corporation. They are bigger than the markets in some cases, simply because they can buy every share and send prices to the moon. They can do that. They can do that with equities. They can do that with government debt. They hold the power, but they also hold the power to dry up that liquidity at any moment. A visual comparison of the share of central bank ownership in each market. So we're looking at that in a different way to look at it, basically, where clearly, I mean, despite the fact that all of these are terrible, when you compare that to where Japan is, you can see that they are in very big trouble. And to even suggest that an asset-backed security is an asset to begin with is fraud. But something that a central bank would want to hold, I mean, what kind of investor would want to hold on to this garbage? Nobody. That's why the central bank buys it up. They know they don't have to worry about being bailed out. If something bad happens, they just get the return on it. I mean, they're a business just like any other, except the fact when they are nearing bankruptcy, they can just print money and somehow figure it all out. I mean, it's a joke. They operate as a business, yet they hold the power to print the money. It doesn't make sense to me. Nobody really thinks of it like that. I mean, the general public, the mainstream media, you're talking about a business. They act without oversight or accountability at all. And then on the other end, I mean, they literally have the printing press. They can decide as much for how much money is out there at any moment. They can pull it back and they can cause a collapse. They can push it out there and cause massive amounts of bubbles that we see today. It's all up to them, whether they want to bring interest rates down, up or down, or anything else. They hold the power in their hands. Moving on. All right, you know the CSPP, I've covered it here on the channel before. Basically, what do you do when you have a lot of companies who need your support? Well, if you're the central bank, what you will do is simply print up a lot of money and you'll buy all of the garbage debt created by these failing institutions. Institutions that should have been wiped out, or some of them that should have been hurting pretty bad, will do okay, simply because you have a program like the CSPP, and that is a program by the ECB to buy up a whole bunch of garbage, print the money out of thin air, and do what they said they were never going to do. Do what they promised that they would never do, and do what's signed on paper that they can't do, but yet they do it anyway. There's always loopholes around, not for you and I, but for the big bankers. All right, so, I mean, we don't really have to get into the details of it, but essentially here I just found it interesting to see that France, Germany are on the top of this list. So they're helping out their friends in France and Germany first. Then we look at Italy and Spain next. Italy and Spain are absolutely the next in the crosshairs. I'm surprised they haven't already fell already, particularly with Italy, because it has such a burden on it in many different ways. This is, I think, one of the most important countries to look for, one of the next dominoes to fall. The country is strained to the maximum. It doesn't have the economy that it once did, and you can see that it is hemorrhaging under the control of the Eurozone. It can't handle it. The EU is detrimental to Italy. It really shouldn't be a part of it. This right here, you can see that the S&P 500 dipping below the 50-day moving average. Now, I'm not a big fan of the moving averages. I mean, it seems to me like these are more for the technical analysis people, and I just like to cover it here because I know a lot of people do cover this, do want to know what's going on with it. I mention it, but I don't put any necessary weight on exactly what it all means in the near future, because on a longer term scale, it really is insignificant as far as I'm concerned. But traders use this type of information. So in the short term, it is actually quite relevant because you can see that the algorithms really pick up on this type of information. So it dipped below, but who knows where this will go. You don't have to have any worries because the central banks will be there to print up a lot of money. So look at this. Facilitating recovery comes at a high cost to the future. This is 3 separate swings that we've seen. And this is on the left hand side. You can see that this is the greater London area real estate prices spiking excessively high. And not to be outdone, Bitcoin going through the roof here in a very short period of time that has gone to levels, I mean, it's showing you that's really outdated. It's gone much, much further than that, right through the sky. And on the right hand side, old cars selling like never before. 3 most expensive cars sold at auction per year. You can see the direction that that's heading as well. It seems like there are some individuals that have more and more wealth than ever. There are some assets that are doing better than ever before. And then on the other end of the spectrum, you have homeless people on every single corner. You have people who can't afford their homes. You have people living in their cars, people living in tents, and you have this grand, let's call it a disparity or a chasm in between the rich and the poor. That middle class is evaporating. You see that not just in the big cities, but you see that in the small towns as well, where we have maximum poverty. And it's all being covered up because of the way that the statistics work. Look, if you're going to sell 10 homes worth $10 million, and that looks good on paper, at the same time, 10 people are now living on the streets, the numbers really get skewed because you don't really factor those 10 homeless people in. It's not really the way that things should be, but that's the way it is. That's all I'll mention with this. Your opinions on certain assets, you can mention those in the comments. Asset prices versus GDP. I think that the GDP, first of all, is significantly lower. Who knows where the actual real thing is, but let's just say let's even just say where it's at. It doesn't matter. It always goes and exceeds where it should be, falls back down to a more reasonable level, exceeds, falls back down to a reasonable level, and exceeds yet again. And now, if we can tell where this is going to happen, we can basically do a dotted line, and it could go as far as 10 years from now, who knows? And this will spike further and further and further, but when it comes down, it has to go back to the GDP line. It has to come close to it, to, let's quote unquote, reality here. That's the way I see it. This is the way that people should be looking at things, but they don't. They only see the dotted line. They don't see what's happening with the correlation in between the two. They may say, okay, well, GDP should continue to rise at this percentage per year, but they do not look at where it has to head, if history is any guide. And what also you may want to notice is the fact that in the previous 2 instances, look at these, where you can see that the angle, basically that drop that it comes down, the asset prices, was more significant during the last time than the time before, and then the time before that. And so we can presume that this will be even more devastating, even more of a violent drop down. The central banks will react accordingly, and I do believe that they will overreact. That is my prediction. After a real deflation exists, the central banks will ramp up the printing presses, and everything will head to the moon, but not before that deflation. If you found this video informative, please give me a thumbs up. If you're not already, then you need to get onto Steemit. And I have the links in the description below, so check those out. I'm on Steemit. I post all of these videos on there, so you could support me on there if you are on there as well. If not, basically it's a cryptocurrency-based, blockchain-based video platform or blog platform for individuals. Anybody can get on there. You can sign up. You can earn some cryptocurrency, but even if you're not interested in it, it's basically an alternative to this place you're seeing it right now. Can't mention the name. All right, so that's all. If you found this video informative, I know you will find my books, The Money GPS, that I mentioned at the beginning of the video, and my newer release, Global Economic Collapse. So you can flip through these books. The links are in the description below. Take care.